And we are live. Good afternoon, crypto warriors, and welcome back to the Gym of Crypto, episode 502. Today is Tuesday, November 19th, and I'm King. Of course, here to bridge the gap between community and crypto every day, Monday through Friday. And today, not a lot of top stories, but a couple of interesting ones. First being Fidelity Digital Asset Services now authorized to operate crypto custody platform. Grayscale files form to become first Bitcoin fund to report to SEC. PayPal leads $4.2 million funding round for crypto risk management platform, and Bitcoin mining firms merge to build world's largest purported mining farm in 2020. But first and foremost, of course, I know you all want to hear about these prices today. Oh man, it is another red day for all crypto. Bitcoin's coming in at $8,088, down 1.33% on the 24-hour clock. Ethereum's at $173.60, down 2.5 cents. Ripple, wow, talking about a buy opportunity for some people who are eyeing that 25-cent mark we talked about. Ripple's at 0.249 cents, so just under 25 cents, and that's down 1.46%. Bcash is at $239, down 4%. Litecoin's at $54, down 2.63%, and EOS is at $3.08, down 2.92%. So again, it's red all over. For those who've been looking for buy opportunities, a lot of people are saying that this bear market will continue and it may go down. But all I can talk about is the present time. And I mean, $8,000 for Bitcoin is still a steal, as well as XRP. Again, it's still overpriced when you look at the price of Ripple a couple years ago. But knowing what could happen in the bull market, especially when the likes of CNBC gets to pumping it, and what we see in the past, I mean, Ripple went up to $3. So again, for those who are looking at different buys, that still might be a good buy at under a quarter right now. So things to consider, as well as Litecoin. Again, Litecoin is still overpriced than what it should have been a couple years ago. I think it might have been at $3 to $6 or something, $8, $54. But even with Litecoin, we saw where it can go when the bull market happens, and that's what I'm thinking about when I'm thinking of some of these different cryptos that I might be interested in buying. Is, hey, if this bull market happens, if they get one good pump off it, what type of return can I get? And that's when you can buy and put those sale markers up just in case it happens. What's going on? Richard Terweem back live again. What's going on? Tessa, Valdez Granville, just chilling. Said price is down because Fidelity, they got to buy cheap. Oh, you know I'm about to jump right over Fidelity in a moment. It's crazy here. Tessa, how you doing? Hello, hello, hello. Yeah, so top story, as was just mentioned, Fidelity Digital Asset Services now authorized to operate crypto custody platform. All right, because this is a base hit, I want to give a hand clap. All right, hand clap for Fidelity for getting this done, and a hand clap for the overall industry as well for having more mainstream news brought to it. Because of course, Fidelity will bring the mainstream news. Fidelity Digital Asset Services LLC (FDAS) has procured a charter from the New York State Department of Financial Services (NYDFS) to operate a virtual currency custody and execution platform. Now, I'm not going to rain over the parade. I'm just going to give one quick side note, and that is, of course, I mean, Fidelity got this. Like, they're not the first company that has tried to do this, or who has been trying to do this every year, probably for like the last 5 to 8 years. So, again, shout out to Fidelity for getting it done. When it comes to New York Department of Financial Services, though, and those regulators over there, I mean, it's a corrupt group of them. You know, the system isn't broke, some of the people are. Because, again, Fidelity is not the first company to try to do this. But what we're seeing already, we saw this with BAC, which this article mentions as well. New York is basically only playing ball with people who are already been playing ball with all those regulators or other bankers on Wall Street. They're not opening up the doors to new companies. They are only allowing well-established companies that have been there to operate. Again, that is corrupt. So I just want to put that as a side note because it must be said when you're looking at this stuff. But again, shout out to Fidelity for getting this job done, for getting this deal made. Superintendent of Financial Services Linda A. Lacewell noted that, quote, this approval is further evidence that innovation and consumer protection can coexist in New York's evolving and expanding financial services industry, unquote. Commenting on that development, the COO of Fidelity Digital Assets, Mike O'Reilly, said, The custody and trade execution services that we provide are essential building blocks for institutional investors' continued adoption of digital assets. The destination as a New York trust company under the supervision and examination of the DFS builds on the credibility and trust we're establishing amongst institutions and other market participants. We will continue to play a leading role in supporting the maturation of the entire ecosystem as we expand our business and the clients we serve. Again, both of these quotes, great quotes. I agree with everything they said. For this space to mature, companies like Fidelity do need to get in. I'm glad they're in. I'm glad they're getting involved. A lot of smart people working with them coming from the traditional banking sector, of course, traditional Wall Street, and they're starting to use some of this new stuff. Now, the same side note, the only knock I have on this is, Fidelity, they're saying they're going to continue to play a leading role in supporting the maturation of the entire ecosystem, which they are doing. However, that leading role they're playing, it started 10 years after the gun went off. They're technically still at the back of the race. And this is the thing I've always said that's going to be, to me, one of the biggest issues we need to worry about moving forward in the industry is that a lot of these companies that are at this point, they're still early to the party when you talk about cryptocurrency on the global stage and what it can do 100 years from now, or 10, 20, 30 years from now for that matter. But when you're talking about right now as it stands, they aren't playing a leading role. Now, they're becoming a leader because they're getting these permission slips from the government, who aren't giving these same permission slips to other small companies or smaller companies or new companies in the space. So from that point of view, yes, they're playing this leading and supporting role in the maturation, but that's only because they're getting an unfair advantage. They're literally getting an unfair advantage, and that's no fault of their own. If I was the company, if you're going to give me that unfair advantage, whatever, I'm going to take it for sure. But again, I point that back to the New York Department of Financial Services, in that Fidelity is not the first group or company to try to do this. So for them to be the one to get it at the end of 2019, going into 2020, out of all these other companies that have tried, again, I'm not saying that the crypto space is fair like any other business in the United States, but corruption, especially when you're talking about regulators doing it, that definitely isn't a good thing to see. So it looks like Fidelity developments in the crypto custody service started earlier in November when they started their Fidelity Investments, which stands behind FDAS, hired Michael Zinnemann as his product specialist to further oversee the company's strategy on cryptocurrencies, custody, and execution services. Zinnemann oversees the company's strategy for its cryptocurrency custody service that launched in mid-October. So again, this is what I mean by changing the narrative. They launched this in mid-October, so a month ago, this was launched, and their narrative is already, we will continue to play a leading role in supporting the maturation of the entire ecosystem. They're not playing a leading role because they just launched this a month ago. So it's crazy to see it. But again, we should get used to seeing stories like this because, if I was their PR officer, I would write up the same type of write-up. I would go ahead and put out there, we're a leader in this community already, even though we're not. And again, be prepared to see this same type of narrative from JP Morgan, from Goldman Sachs, from Bank of America, from what's the other one, Wells Fargo. Expect to see these narratives, and especially next year as this space continues to grow and the halvening happens, expect to see these banks and these players that have already been around that show no interest in Bitcoin and cryptocurrency, expect them to come back out saying, hey, we're happy to be a leader. We're happy to lead the way. We're happy to be one of the first innovators to start these things. But just remember, the reality is that it's actually just their buddies, the other regulators, who are giving them the pass first before they give it to anyone else. So again, shout out to Fidelity. I don't want this to sound like a knock on them. They're doing what they should be doing as a business. And again, it's good to see them come into this space because this will bring more mainstream institutions and mainstream adoption. So again, hand clap for Fidelity. But for the New York Department of Financial Services, hey, you guys you're supposed to be unbiased in what you do and how you hand out these licenses. So I would love to see other companies get these as well. A lot of smaller companies are out there, or a lot of new companies who might not be as well established on Wall Street, but are still doing the exact same thing as this type of custody service here. So definitely love to see that. But yeah, this is this is definitely affecting the price in the short term because you're talking about a custody service. They just launched. They're making big news. That means they're going to buy up a bunch of crypto and they're going to hold it. That will affect the price as well. In other news, Grayscale files formed to become first Bitcoin fund to report to SEC. That's right, publicly traded Bitcoin fund Grayscale Bitcoin Trust, GBTC, filed Form 10 with the United States Securities and Exchange Commission to become the first crypto fund to report to regulator, as it says, or to a regulator or regulators is what I'm assuming it should have been typed as. Grayscale announced this in a blog post published on November 19th that if the filing will be deemed effective by the SEC, several aspects of the fund's operations could change. Again, another hand clap to Grayscale, one of, if not the first, publicly traded Bitcoin fund. I'm pretty sure they were the first. Barry Silbert's behind that, if I remember correctly. But shout out to Grayscale. This move makes a lot of sense. Here, just from the last story, we are not always aligned to what the government is doing when it comes to cryptocurrency and Bitcoin in this industry, because they have been skewed to do the unfavorable and seemingly corrupt. However, I fully agree with what Grayscale is doing here. It makes a lot of sense. I mean, at this point, they are basically, they're basically everything a regulator could want, right? They're doing the right things already. They're keeping accountability. They're transparent. They're actually playing ball with the government. So all these are pluses. So it only makes sense for Grayscale to actually just go over the tipping point and say, hey, we might as well report everything to the government as well, so we can get the benefits of reporting to the government as well. Some of those benefits that aren't actually even mentioned in the article are things that could be taxpayer relief. I mean, I don't know what happens if Grayscale goes through a crisis, the fund loses a lot of money or something like that. Well, if they're reporting to regulators, if they're working with the government, they will find ways for relief. They don't mention that. One of the main things they mention is that, hey, once we get this approval, we can start to actually market toward more institutional and accredited investors, something they've already done. The Grayscale Bitcoin Trust, the GBTC, at this point has only been for accredited investors. Again, those, I believe, who has a net worth of at least $1 million or make at least $250,000 a year, right? So it's only been marketed toward accredited investors. And most of those investors that they have, again, these are investors who understand the landscape of working with regulators. And so it's not a scary thing for them to all of a sudden go from, wait, this was supposed to be an independent company not working with government, all of a sudden to we're going to give our filings, our audits, and all that stuff to government. It makes sense. These people are used to dealing with it. Again, it opens the door for Grayscale now to say we're not only targeting people who are interested in cryptocurrency as investments, whatever, but we can also target everyone out there in different niches and different industries and say, hey, this is a trust that is regulated, or we do report to regulators. The SEC is on top of us. We're not hiding anything. We're transparent. I am glad to see this happen. This is all I meant by that last story with Fidelity. I wasn't trying to knock Fidelity. It's just that there are other companies in the space that have been around before them trying to get the same thing done. They face those roadblocks. So here, when I see Grayscale Bitcoin Trust, the first publicly traded Bitcoin company out there, as well as one of the first funds for Bitcoin, seeing them say, hey, we do want to work with regulators. We do want to go over to the SEC. We want to report to them. We want to be transparent. We want to play by their rules. I love seeing that. I agree with it. I think this was the way it should be done. It was done the right way. The government didn't come to GBTC, or at least not in front of all of us. They might have got that tap on the shoulder, but they didn't come to them bullying them, telling them that they must do this. They grew organically. As a business, they got into the point where they say, hey, it makes more sense for us to actually work with the government because our customers are already working with them in other parts of their business as well. So I love seeing this. Again, shout out to them. The firm notes that, again, in event of the approval, as far as the regulator deeming the filing effective, the structure of the trust will remain the same and will not be added to a national securities exchange. However, there will be some changes to Grayscale's scope and operation. Again, one of those changes would be designating the funds as an SEC reporting company and obligating it to register its shares under the Exchange Act. And many institutions block investors from considering trusts based on SEC approval. Grayscale's eligible investor audience could widen. Again, it makes sense for their business model. They're already targeting people who do these type of things or work with the government and other businesses. Let's see. They said the SEC's auditing standards will also be applied to Grayscale. I don't see the auditing standards being an issue because at the end of the day, you talk about Grayscale and cryptocurrency, it's all transparent. They just got to, print off if this whatever they're using, whatever custody platform they're using has it. All they have to do is just print off basically an Excel sheet of what and when and where the money went. Again, this is all on the blockchain, so it's not very difficult to get this information. And again, they also know that credit investors would also benefit if the filing is approved by saying accredited investors who have previously purchased shares in the trust private placement would have an earlier liquidity opportunity as the statutory holding period of their private placement shares will be reduced from 12 to 6 months. So that's a good thing for the accredited investors. Who doesn't love liquidity, right? Especially if you're an investor in a volatile market, you might not want to wait that year or 2 years, even though if you were in a bear run like we are right now, it doesn't really matter. But for them to get that from 12 to 6 months to be able to, to actually have their options liquid, I think that's a great thing for their investors. So again, this is an all-around win for Grayscale. It's an all-around win for their investors. And what I love most is that they did this organically. It's a win for the industry. And to me, this is self-regulation again. This is self-regulation. It's not the government forming task force saying you all must do this without a vote. It's a company that's already in the space, growing and seeing the need for government, saying, all right, we get it. We do need you guys. We're gonna give you all our filings if you will have us. And again, it's interesting. This says in the event of an approval, because as far as what the government's been saying, they want everybody to go toward them, right? So if they don't approve the Grayscale Bitcoin Trust, as far as working with the SEC and becoming the first crypto fund to report, to me, that is going to raise a lot of red flags and question marks as to why they would not. So I'm assuming this gets approved. If it doesn't, I think that will be the top story next time it comes around. We'll stay tuned to see what happens with it for sure, though. What's going on, Clarence Dennison, Sergeant Crypto? No one's late. These are random times. Don't forget, Tuesdays and Wednesdays might be some random times, people. What's going on, Antonio? Yes, make sure you smash that like and share, people. All right, PayPal leads $4.2 million funding round for crypto risk management platform. I mean, the story is the title itself, people. I mean, with the last two stories, Fidelity, Mainstream, Grayscale Bitcoin Trust that are trying to become more mainstream by working with the government, and now PayPal. I mean, if you haven't heard already, regardless of that price point, mainstream institutions are doing things to get involved in the cryptocurrency industry, all right? Payment processor PayPal has led a $4.2 million funding round for cryptocurrency risk management platform TRM Labs. In a November 19 press release, TRM Labs announced that it secured $4.2 million in investment round led by PayPal with participation from other top investors, including Initialized Capital, Blockchain Capital, and Y Combinator. So again, what TRM is attempting to do is build solutions to prevent crypto fraud and financial crime. But again, the bigger highlight of this story is that PayPal led this round. And again, PayPal is not going to lead a funding round if they don't have any plans for cryptocurrency, right? These are the things we want to think of. Even if PayPal directly won't launch any cryptocurrency on their platform, it is clear that they want to be involved, and we already know they are involved in the industry. And these are some of the ways, not only PayPal, but we're going to see other institutions. I know for sure JP Morgan has already started this. Goldman Sachs is all over the place with this. I mean, you know that with Circle. But a lot of these bigger companies who might not want to have their name attached to Bitcoin or cryptocurrency as in general, they're going to go about it around the way, and they're just going to buy or invest in other companies who are involved. This one is a great company, I think, not only because it's in the cryptocurrency industry, but because PayPal could actually use some of their solutions probably for their own business. And that's more than likely why they invest. It's a double hitter, if you will. They're saying that, hey, if this works for the cryptocurrency industry, we're going to make money by investing in them. And then if this, whatever solutions they build actually works for fiat currency or traditional legacy systems, then we can just implement it on our payment processing platform as well and be the first people to actually use it before banks even use it. So I think that's pretty cool to see. TRM was founded in 2018. So again, a very new company, aims to support financial institutions across the United States, Latin America, Asia, and Europe by measuring, monitoring, and mitigating their crypto risk exposure, meeting regulatory requirements, and helping streamline their anti-money laundering compliance. That is a lot to do in one thing. This is actually a business we've talked about on this show for a while now, and that business is basically making a compliance department for crypto. Like, that's what this solution is. Measuring, monitoring, and mitigating their crypto risk exposure, meeting regulatory compliance requirements, helping streamline anti-money laundering compliance. They're basically saying we're going to do compliance for crypto when it comes to institutions, especially if these banks start adopting it, which we all think will happen, right? Whether it's Bitcoin or JP Morgan coin or Libra, we all are pretty much under the assumption that, hey, if this trend continues where it's going, banks will adopt it. So again, it's pretty cool to see that PayPal is led the investment round on this. I want to give a hand clap to them because, again, this is another basic. This is another mainstream company making news and waves for working with something that is supposed to be just strictly cryptocurrency. So it's good to see that. And hey, every week we see more and more and more. That's right. Clarence Dennison said they want that Bitcoin. Listen, they're going to get their hands on it somewhere or another. Bitcoin mining firms merge to build world's largest purported mining firm in 2020. Way to cap off these stories, right? First three stories are about institutions and what they're doing in the crypto industry. The final story is about two Bitcoin mining farms merging together to create a super farm. That's right. German Bitcoin mining firm Northern Bitcoin has entered a merger agreement with United States-based competitor Whinstone to jointly build what supposedly be the world's largest mining farm. According to a Northern Bitcoin press release published on November 18th, Whinstone is already building the aforementioned facility, which is expected to have a capacity of 1 gigawatt of an area of over 100 acres in Texas. The mining farm in question will allegedly be the largest data center in North America. This is actually pretty cool to see because as it stands today, some of the larger mining farms or mining pools, of course, are all located in China. Jihan Wu, he has a stranglehold on a large percentage of mining operations when it comes to the industry. So it's good to see two other companies, especially forming in the United States and Texas of all places, say, no, you know what, we're going to build up something big as well and we're going to compete. Now, we've talked about this before. I'm not sure if it was the same mining farm. I know there's been a lot trying to establish themselves in Texas and Wyoming as well. But the biggest thing we said about the mining farms, especially these large ones they're trying to build very quickly, you can see here this quick construction plan has the first phase of construction, which is expected to conclude in Q1 of 2020, will already have a capacity of 300 megawatts, and the construction as a whole is expected to be completed in Q4. Well, when it comes to all this mining and it comes to this quick construction, my biggest question is, do you have the people to put in place to operate this thing correctly? Now, I would assume yes, if you're talking about two of the biggest mining companies or, two competing mining companies, one in Germany, one here in the United States. I'm assuming they have the right people to put in place there. I'm assuming that they will also, maybe deconstruct or, get rid of some of the people at some of the other mining operations they have and maybe try to centralize all of them at one place. But that's definitely going to be something to pay attention to. If you're going to have a big mining farm, you're going to have to have the people who can operate a big mining farm, who know what to do, who know what to check, who know to make sure things aren't overheating, who knows about the industry, how much to mine, where to send it, all that good stuff, how to defend against exploits or security attacks, right? So a lot of stuff goes into that. It looks like the first two clients that will take advantage of this upcoming facility will reportedly be two publicly traded corporations that will use a significant portion of its capacity for Bitcoin mining. They didn't say which corporation, so it remains to be seen. I wonder if we're going to see some Long Island iced tea Bitcoin in there, or will we see an actual real corporation? Again, still after its completion, the data center will also allow for the acceleration of video rendering and artificial intelligence applications. Now, this is the part that also interests me as well. You're going to have a big mining farm, a lot of electricity, a lot of resources. Of course, if you're not all the way scaled just for Bitcoin mining, then it does make sense for them to do other things. And this looks like those other things they would do to try to make money and utilize that space. So it's pretty cool to see. Northern Bitcoin is actually a stock traded company founded last year that specializes in sustainable Bitcoin mining. The firm operates a mining farm on renewable energy in Norway. So might be something to pay attention to as they're publicly, or as their stock, or they're traded on the stock market. I'm assuming they're publicly traded. Something to pay attention to. And again, something to also pay attention to is if this actually happens. I mean, we'll know very soon by the end of Q1 next year, by March, April next year, we should know where they're at with this plan. If they have that first, 300 megawatts up and running, and if they have those first 2 clients already mining Bitcoin. Again, big base hit here. If we can bring mining operations to the United States at this magnitude, that'll be one of those things that will make, the country will have to pay attention, especially when you're talking about the state of Texas. They're going to have to hire people. And I'm not just talking about people who are technically savvy. They're going to need custodians. They're going to need security guards. They're going to need people to come in and troubleshoot like minor things that don't have everything to do with the technology itself. So this is going to open up a lot of jobs for a lot of people in the area, and a lot of people are going to become more aware about Bitcoin and cryptocurrency. And eventually, if all goes well, it will only make sense, especially in the local parts of Texas near this area, to start programs and start training people on how to operate Bitcoin mining facilities. 1 + 1 = 2. The VP here decides to leave one day and start another big one in another state. Someone else decides to do the same thing. Next thing you know, we got 4 mega mining facilities in the United States in the next 5 to 10 years, right? This is how these things happen. So great to see. Hopefully it works out. I can't wait to check back in on this story. Last couple of quick comments. Clarence Innocent said, bought me some more miners while they were cheap. Exactly. This is the time to buy everything in the industry right now when everything is cheap. A. Kent said, what are your thoughts regarding KYC regulations that have been forced upon BTM operators? Again, when it comes to all regulations that have been forced on this industry, I don't agree with the majority of the regulations right now. And again, the primary reason I do not agree with these regulations, to make this clear for people who might just start watching, it's not that I'm anti-law or anti-government. I'm anti these regulations because first and foremost, there was no votes. No one voted on this stuff. And cryptocurrency and Bitcoin isn't even a conversation on the national level. So the fact that government regulators are creating task force that uses taxpayer money to create and start and use them, the fact that they're only giving hall passes to places like Fidelity or JP Morgan and not to some of the newer companies where you have Grayscale Bitcoin Trust, who have been around since the beginning, saying, hey, we hope we get this approval. Again, these are the reasons why I'm not a fan of regulators. So when it comes to KYC regulations on BTM operators, Bitcoin mining operators, assuming you're saying as well as Bitcoin ATMs, exchanges, anything that has to do with the industry, I do not agree with the KYC regulations because they're going at it from a traditional standpoint, from a legacy standpoint. And the craziest thing is, it still doesn't work. They're pushing these regulations, which again are actually forcing or making it more difficult for the good actors because the bad actors they're not using popular exchanges anyway. People these regulations, these know your customer, anti-money laundering, they're not affecting the bad actors. The bad actors aren't stupid. If they have tens of 20s and 30s of millions of dollars from criminal activity, majority of them are going to use VPNs. They're going to use Tor. They're going to use peer-to-peer networks. They're not going to go to a Gemini or Coinbase and try to exchange $5 million here, $3 million there. So as a whole, I've been against a lot of these regulations. No one has voted on them. The regulators in charge have clearly shown to be corrupt. This is nothing I'm just making up. They have clearly shown to be corrupt, so you can't trust their judgment. And last but not least, they don't even know what they're talking about. Again, in 2017, when we went to CIAA and I interviewed the FINRA regulator, which I'm sure is still on the channel, I interviewed the regulator and asked him about his opinion on Bitcoin and cryptocurrency and as far as regulations. And his first few statements was like, we need to regulate this thing. We need to get on top of it. X, Y, and Z, X, Y, and Z. And it must be regulated. And then when I actually asked him questions about what Bitcoin was, what cryptocurrency was, why they should be allowed to regulate it, why they're regulating without any votes or anybody asking them to do this, he had no answers for any of those above questions. And that's how a lot of those regulators are. They don't know what they're talking about. They don't know the technology. They don't know the technical side of things. All they know is a dollar sign. That's all. I mean, they literally just see a dollar sign and they're saying, hey, this is another way for the government or for us specifically, these regulators, to make more money. You really have to be crazy if you don't think when it comes to, especially New York itself, when it comes to a lot of this where all these different Bitcoin operators and exchanges can't operate in it. However, the 2 or 3 they are allowed to has nothing to do with money going on behind the scenes. There's nobody getting a little extra money for the campaign. No one's getting a free dinner here. I mean, come on. It's quite clear what's going on. So that's my that is my spiel on regulations. Thank you for the tip, Sergeant Crypto. It says the creature from Jekyll Island 2.0 with these so-called rules. I mean, it literally is. This is the digital Jekyll Island, except really with the same players. At the end of the day, the Federal Reserve still runs the show. And they're using their banks as proxies to ensure that they still run the show. So again, I'm not mad at it. It makes sense. It's good business. Just Chillin' said, King, are you hedging with precious metals at all? Just curious. I used to actually have hard metals and hard assets. But no, not doing too much hedging with anything at this point. Only because, I mean, every market is going through their thing. We're seeing the traditional stock market going through it. I really don't trust the traditional stock market until I see some type of serious dip. And then precious metals, again, I used to kind of be involved in it, but I got all precious metals to go more into cryptocurrency full time. So, hey, Kent, if these operators don't establish themselves as U.S.-based corporations, i.e. franchises to the state, that's basically what it is. Minho, thanks for joining. And last but not least, A. Kent, conversely, if they establish themselves as unincorporated business trusts, then the operators truly have constitutionally protected rights. Again, we're not playing fair here in the United States, so I wouldn't hedge my bet for, if I was a business owner for a big business and growing and scaling, I wouldn't hedge my bets on constitutionally protected rights. This goes back to what we said about Sammy the Bull Gravano in that interview he had when he basically said, this is how you can mess up another construction operation. He said, all you got to do is basically have someone at the entrance of a construction thing, stop every truck entering and exit, search every truck, X, Y, and Z. He says, as days go on, business lose money. Next thing you know, a month later, they don't have the money to send the trucks out or bring the trucks back in. The operation closes down. He said, hey, we could do something like that by playing by their rules. The government does the same thing. We saw this already. I can't think of the companies off the top of my head. I think it was, I don't want to say Kraken. I know it was one of the exchanges. It was either Kraken or what is it? I can't think of it. It might have been Kraken, but where we saw the government start to subpoena them all the time and start to say, hey, you can't do this, you can't do that. And it was messing up their operations. And again, they were doing that because they are trying to destroy the competition so their own JP Morgans or their own Gemini's at this point, which is basically backed by New York, they can excel. They're trying to stifle competition. So I personally, as a business, a crypto business, I would not trust the government unless you're just straight up paying them already. Now, if you're paying them money, that's a different thing. But if you're just, hopefully saying, well, we're constitutionally protected to do this, I wouldn't hedge my bet on that one. Not at this point. And what we've seen thus far since Bitcoin started hitting those highs back in 2017. Other than that, that is the show for the day. As always, thank you for watching, people. Make sure you smash that like and share. And, of course, leave a review on one of our many podcast apps. We're on iTunes Radio or iTunes Podcast, Spotify, iHeartRadio, as well as Google Play Music. As always, thanks for watching. Make sure you smash that like and share, and I will see you all tomorrow. Cheers.